What is going on? So, another fun in earnings. So I'll give you a quick summary. Basically, their earnings, or I guess the conference starts in around 10 minutes. I'll mute myself. We'll go kind of listen to it. And then afterwards, I'll go over some of the highlights. Surprisingly, though, just to start off, it is about 4.19% in the red. I would have anticipated that it'd get hit a little bit more because a couple of things. Earnings came out 137.8 million. I quickly drafted this, so I just made a fun little document right here. And so yeah, 137 million in revenue, 1,550 in production, 1,457 in deliveries. So this definitely was not a good quarter. They also lowered guidance to I can't even talk. Too many things. So yeah, they lowered or revised their year-end targets to 8,000 or 8,000 to 8,500, which is not good. They kind of allude to the phase 2. So in their earnings, or the previous earnings, they did allude to shutdowns, rolling blackouts, and that is to accommodate for phase 2. So I have a feeling the fact that they are putting that down on, I guess, some of the highlights does mean that they're going to use that as an excuse. Don't quote me on that. We'll kind of have to sit tight and wait. But they do have basically 1.1 in cash and cash equivalents. They burnt through about 752. So just logic does dictate that they're going to have to dilute within the next quarter. So maybe that seems to be their holiday ritual, because I know they did that December of 2022. So this might actually come to duplicate scenario here. Well, I like to give all viewpoints, and of course there is some things that you can say that maybe it's more optimistic for the future, but you know what, this is, you can, like, if someone saw this, they're going to think that this is a brand new company. And unfortunately, like I said, I have no idea why it's actually going up. Maybe there's some other aspect in here that's a little bit better. They did actually beat on their earnings per share, so that surprisingly is a positive. So they missed compared to Wall Street's revenue estimates severely, and earnings per share, oddly, they did beat. So I don't know if that is maybe giving some justification. I haven't fully went through absolutely everything, just looked at a lot of the highlights, how much they're burning through cash. I did look at the liquidity aspect of here just to see what they're talking about. And yeah, I get the sense that they are going to need to dilute. And it'd be interesting to see. They haven't really talked on this in the past, whether they've used it, but the credit facility. So in, I think, beginning of 2022, I think they called themselves a syndicate of banks, gave them a 1.5 billion, if I remember correctly, rolling line of credit. So we'll see if they are going to be using that or not. And I don't know. This isn't good, especially to lower it down to 8. Like this year, it should be at 49. Like to do 8 is absolutely horrible. And I get some people, their arguments right now might say, well, you know what? Lucid isn't trying to target the mass, isn't trying to be a Tesla. It's going to be a Ferrari. So with that mentality in mind, so let's look at Ferrari's PS ratio. So it's 9.7 as it stands. So if you think about it, and if you're kind of following that same mentality, looking at Lucid, it's trading at 13.1. So it does need to pull back roughly about another 30 to 40% based on this. If Lucid isn't going to be one of those car makers or tech companies essentially that's going to be pumping out the vehicles like a Tesla equivalent, then the metrics do need to change pretty significantly. So Lucid just ultimately needs to get their stuff together, and I'm honestly questioning, I've been questioning this a while for overall, but at what stage, especially with the PIF, they have a controlling interest. They have some sway with what happens with Lucid. At what stage do they just say, hey, Peter, you know what? It's been fun, but you need to go. I've not seen any other company do 3 mass layoffs of VPs within, I think their first one was May of 2022. They did one around December, and then during the Q2 earnings. So at what stage do you look up? But again, I could be wrong. I still really do like Lucid. This is why I still cover it. But you know what? This stuff is getting quite annoying. And it's like having your, like, a parent feed the child, but the child is still failing. Like, imagine if Lucid didn't have PIF. Just think about that for 1 second. Lucid would be near bankruptcy right now. Like, I don't know. The PIF really has saved Lucid, which is definitely, I think that's one of the biggest catalysts for Lucid, is the PIF seems to be having and willing to give their firstborn child to Lucid. But just looking at this, I don't know. They gave themselves a handicap as well. So in order for them just to hit their targets, they just need to do 1900 for production. That's it. And supposedly, based on their previous guidance, Q4 is supposed to be their big one. So why are they kind of giving themselves like a handicap? It doesn't make sense. So once again, they kind of missed on revenue, unfortunately. Earnings per share was better. So the consensus was around, I think it was 32 cents, negative 32 cents. So they beat on that compared to Wall Street. Just, I think what a lot of people are going to focus on is essentially this revision. And so far, a lot of other companies, Rivian and many others, have maintained their guidance. So who knows? We'll just have to sit tight and listen to what Peter does say. And when it comes down to these questions, this is the very first time that I don't think he's going to have to answer about Apple for once. But now people's concerns are, what are you doing about the damn stock price to help investors, and what are you doing for operations? So a lot of good questions here, and hopefully Peter and Sherry actually answer them. I did sense the last quarterly earnings, they were a lot more transparent. Didn't bring up like technology for absolutely every scenario. So we'll just have to sit tight and I guess wait for that. But based on just the preliminary looking at this and just how much they're burning through, my first intuition kind of thought is they're going to dilute. And they just, I don't know. I'll take a look at the chat, see what you guys are doing. Okay, so it's not just me. Okay, yeah. DY, yes, they do need a new CEO. Why aren't they delivering more cars to Saudi Arabia? Well, Dr. Zorro, I feel like, so technically that's something that they started, AMP2 was late. It was supposed to be promptly September 1st, but it got pushed, I think it's to the 15th or whenever else it was, and only 700 bodies were shipped there. So that's a little bit low in my opinion. And plus, once they actually do start to ramp that up and start to send a lot more bodies to Saudi Arabia, you're going to see a significant, like the cost associated to doing that is going to be extremely high. But of course, coming from Lucid, like what are you going to do? You can't say no to Saudi Arabia or the PIF to do that. Like they're the big brothers. So earnings per share did beat this time around, but going forward, once they start ramping up at the AMP2 facility, not going to be the case. So yeah, pretty good stuff when it comes down to that. Cost of revenue, I don't know. Tesla bulls, I'm sure, are just having a field day. Like, what is this? What on earth is that? That is just pathetic. And inventory, once again, inventory. So last quarter, I think they had about 800. And their reasoning is that essentially like, oh, there is waiting international deliveries. I feel like every single earnings, us as investors, we have to question like, what is their excuse going to be this time? I feel like that's not a right way. But again, I could be wrong. Hopefully they change something very soon, very, very soon, because Lucid and its investors cannot stand much more of this because, yeah. But on a positive note, it seems to be going up for whatever reason. I'm not really aware of any extreme positives that would really cause someone to buy right now. I was anticipating based on the technicals for it to go down to around 350. And just so you guys know, so it is that time. Once they actually do get on, I'm going to mute myself. I'll go back on afterwards and we'll kind of go over the good, the bad, and the ugly I'll periodically just switch between this and Ortex and stuff like that, just to give you a good overview of what is happening. But even looking at the order graph, a massive amount of selling. So not really the best. But you know what? This is why we're here, because we all really like the technology. We like Lucid, just, I don't know. Maybe I'm being too nice, or maybe I'm not, I don't know. Moonman, very true. Well, especially with that new strategic partnership between Hyundai and the PIF, technically that's another licensing agreement that could come down the pipeline. That's not a good sign. Lucid is late. 1 minute late. And engineers, so they're old school. They need to be religiously on time. Yeah, they do need a good partnership. Well, in all honesty, that news about them switching to the standard charging, I think that is kind of good, at least. Sam, I am welcome. You know what's funny? I actually did see something very similar to that about how a CEO should be, like, their salary should be correlated with like the stock price and true performance. Like the last shareholder meeting, like everything got passed because, well, the PIF probably rubber stamped it and said yes, but his milestones are so crappy. But Sammy, we all absolutely love you. You're the most optimistic. It's amazing. You level us out. Oh, they're 2 minutes late now. That's not a good sign. Actually, I'll quickly pop over here. Let's see what's happening to Rivian and their earnings. So they're up 2.3%. Yeah. And then Lucid down 3.49. It is unfortunate. It is definitely unfortunate. But like I said, if they are going to follow the path of being a low vehicle producing company but high quality, similar to Ferrari, their multiples do need to change, similar to Ferrari. So 9.7, and then yeah, so Lucid's PS ratio right now is 13.1, so they'd have to take a 30% cut at least. Still nothing. 3 minutes late. I think even myself, I like to be on time. Yeah, Johnny, exactly like DM. Dr. Zoro, honestly, I wish I could actually just have like 10 minutes with any of the VPs from Lucid. I agree. The referral program is good, but it's just piggybacking off of what Tesla did. And I still, like, I did a couple of videos and I said, like, what the hell is this damn, like, you know, they still haven't joined, so I'll have a couple of minutes to actually go over this. Where was this referral program? What the hell is this? This damn duffel bag. So someone pays like 100 and something, 115,000 for a Grand Tour and gets 1,200 off. Someone spends $249,000 for a Sapphire and they get a damn duffel bag. What is this duffel bag all about? I'm very curious. I asked people during my video a couple times, like, have you seen this? Has anyone in the chat seen this damn duffel bag and what this is all about? Is this made of gold? Why? It doesn't make sense to me. I have the correct time, right? Yeah, no, they're 5 minutes late now. Well, that ain't good. That ain't good. But yeah, no, I'm curious about that damn duffel bag. Joss, yes, they are. That is not a good sign. They are late. I don't. Yeah, I really wish that they would listen to shareholders. So you can hold the damn bag. I know. Oh yeah, Sam, I am. Bag full of money. That's the secret. That's how they're sifting a lot of this money out. And it's funny. So good old 𝗪𝗧𝗪. Ever since I started covering Lucid, day one, I think it was Q1 2022. Like every single time Sherry has ever given guidance on like, oh, we have enough cash up until Q4. I'm like, no, that's BS. It's always 2 quarters prior to that. Just be aware that, catch on, this their thing that they like to do. And notice how they said they don't need any more money up until I think it was Q2 2024. Well, guess what? Based on this right here, they need money. It'll be probably later this quarter. Another holiday surprise. But as long as they sell it to the PIF, I wonder at what stage, not to speculate here, but since they are 6 minutes late now, I might as well keep ranting. At what stage does the PIF not just say, you know what, F it, I'm going to take these guys private? Like 65% ownership right now. If they dilute again, then technically, like, at what stage does the PIF be like, you know what, it's easier just to buy us out? And when that rumor came out in January, I even said that. It's like, you know what, like they are going to need to dilute. PIF is going to have to funnel a lot of money into Lucid. I don't know. Okay, well, this is a first. Normally Lucid's late by like a minute, maybe, not 7 minutes. Jacob, you know what? I am actually very fortunate when it comes down to Lucid. I have an average of 650. So I know a lot of people have a lot higher than that. And I actually just bought recently with Interactive Broker in my account there. And I think that is $5.15. So I'm comfortable. I've been doing a lot of options. So I like reading the charts and doing technicals and all that other fun jazz. So yeah, I'm getting concerned. Yeah, I don't know. I have no idea what's going on. Did they forget about it? Oh God, let's hope. Mr. Yega 17, yeah, 780. That's 650 Mershard. Sorry if I'm saying your name wrong. See, that's the thing. A lot of people see, like, I don't know. The technicals are breaking down right now, though. Yeah, this is weird. Thanks, Lou. Oh, I love the name Lucid Gravity. Nice. Oh, wouldn't that be a twist? That would halt the stock in a heartbeat. If they just say, hey guys, guess what? We're being halted and Lucid is...
Thank you for standing by. Welcome to Lucid third quarter earnings conference call. At this time, all participants are in a listen-only mode. After the speaker's presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 11 on your telephone. You will then hear an automated message advising your hand is raised. To withdraw your question, please press star 11 on your telephone again. Please be advised that today's conference is being recorded. I would now like to hand the conference over to your first speaker today, Head of Investor Relations, 𝗪𝗓𝗓. Please go ahead.
Thank you, and welcome to Lucid Group's third quarter 2023 earnings call. Joining me today are Peter Rawlinson, our CEO and CTO, and 𝗪𝗓𝗓𝗛, our CFO. Before handing the call over to Peter, let me remind you that some of the statements on this call include forward-looking statements under federal securities law. These include, without limitation, statements regarding the future financial performance of the company, production and delivery volumes, financial and operating outlook and guidance, macroeconomic and industry trends, company initiatives, and other future events. These statements are based on predictions and expectations as of today, and actual events or results may differ due to a number of risks and uncertainties. We refer you to the cautionary language and the risk factors in our most recent filings with the SEC and forward-looking statements on page 2 of our investor deck, available on the investor relations sections of our website at ir.lucidmotors.com. In addition, management will make reference to non-GAAP financial measures during this call. A discussion of why we use non-GAAP financial measures and information regarding reconciliation of our GAAP versus non-GAAP results is available in our earnings press release issued earlier this afternoon, as well as in the investor deck. With that, I'd like to turn the call over to Lucid's CEO and CTO, Peter Rawlinson. Peter, please go ahead.
Thank you, 𝗪𝗓𝗓𝗛, and thank you everyone for joining us for our third quarter earnings call. In Q3, we delivered on a number of the key milestones that we set out to achieve. In September, we started production of the Air Pure rear-wheel drive, as we said we'd do, and we are currently in the process of ramping up its production. Now, the Air Pure rear-wheel drive is our most attainable Air, with a starting price of just $77,400. However, it sacrifices absolutely nothing from the style and technology, range and performance, space and practicality. It has it all. The Pure rear-wheel drive can charge up to 150 miles in just 12 minutes and has an official EPA estimated range of 419 miles, more than any other electric car currently available besides other Lucid Air models. But most importantly for me, it's incredibly delightful and engaging to drive. And we continue to push the boundaries of our technology with a Pure rear-wheel drive efficiency of approximately 4.74 miles per kilowatt hour, and this is further widening the gap against our competitors. Now, for customers, this means the ability to go further with less batteries, and because the battery is smaller, this means the car weighs less, is more agile, and can cost less than a vehicle of similar range with a larger battery pack. So you get greater distance, smaller battery, less raw materials, lower running costs, immense interior space, and it's much better for the environment. We also started production of Lucid Air Sapphire in September, and we delivered the first cars to customers at a special event in early October. The Air Sapphire is the world's first fully electric luxury super sports sedan, achieving a 0 to 60 miles per hour time of just 1.89 seconds, a 0 to 100 miles per hour time in just 3.84 seconds, and a quarter mile time of 8.95 seconds with a top speed of 205 miles an hour. Air Sapphire delivers both 1,234 horsepower and an efficiency of 3.61 miles per kilowatt hour, as well as an EPA estimated range of 427 miles on a single charge, representing an extraordinary fusion of capabilities. I mean, for reference, the closest competitors provide perhaps between 20 and 50% less range. Now, the technology that underpins Sapphire enables an unsurpassed blend of performance, agility, and versatility, and the result is an extreme performance car. But it's not just about 0 to 60 time. That's just one dimension. It's truly a rewarding car to drive with amazing road car dynamics. In fact, Jason Cammisa, who is a well-regarded automotive journalist, said the Lucid Air Sapphire is, and I quote, the best handling sedan in the history of the world, or maybe the best handling car, period. With the Lucid Air Sapphire, we once again raised the bar and increased the gap between Lucid and its competitors, creating the world's most well-rounded and versatile high-performance EV. We also achieved major manufacturing milestones in September. In Arizona, we officially shifted general assembly to the Phase 2 factory. This is just the start as construction continues on the new powertrain manufacture area, with our body-in-white expansion and stamping facility getting really vertically integrated out there. We made history in Saudi Arabia also, opening the country's first ever car manufacturing factory. In its first phase, the factory has a capacity to assemble 5,000 Lucid vehicles a year, and operations are already underway. Now, before turning to production and deliveries, I'm delighted to announce the appointment of Mr. Mark Winterhoff as our new Chief Operating Officer, a newly created role which reports directly to me. This appointment is a natural evolution of the company as Lucid enters the next phase of its growth. In just 2 years, we expanded our global sales and service footprint, built our second factory facility located in Saudi Arabia. We signed our first technology agreement with Aston Martin, and we are working assiduously on our future vehicles, the Gravity SUV, as well as our more affordable mid-size vehicle. Thus, the execution of our strategy towards global manufacturing, supply chain, sales and service, marketing, and international markets is indeed critical to our success, and I'm confident that Mark's intimate knowledge of Lucid and extensive automotive experience will be invaluable as we continue to grow. And I believe this will significantly benefit us by freeing up my time to focus upon my key strengths, namely the product strategy and its technical execution, the overall commercial strategy, and a long-term vision for this company. I particularly look forward to help drive our technology advantage over our competitors with our exciting technology roadmap. And naturally, I'll also be closely partnering with Mark in essential day-to-day matters and operations. Now, turning to production and deliveries. In Q3, we produced 1,550 vehicles. Now, this does not include over 700 vehicles that were in transit to Saudi Arabia. Whilst these were manufactured in Q3, they will only be counted towards production upon final assembly at our AMP2 facility in Saudi. We delivered 1,457 vehicles in the third quarter, including initial deliveries of Lucid Airs under the Ministry of Finance agreement. We've decided to prudently align our production with deliveries, and we are adjusting our production outlook to a range of 8,000 to 8,500, down from more than 10,000. Now, Sherry will touch on this in a little more detail. Now, turning to brand awareness, a critical imperative has been very specific and compelling sales and marketing initiatives and actions to enhance awareness and demand. Efforts are well underway and showing good results. In North America, the majority of orders in the third quarter came, in fact, from new customers. These are customers whose first contact with Lucid was in the quarter of their order. And we believe that our targeted, data-driven approach to marketing, as well as our compelling offerings, are bearing fruit despite an uneven macro environment. The volume of Lucid Airs on the road also continues to grow, and it's exciting to see all the photos of air sightings in the wild that people are sending out. I believe that our brand awareness can benefit more meaningfully once we hit that critical mass of cars on the road. So we're pleased with our brand awareness progress in the US as well as in the Middle East. We're making progress in Europe with test drive growth, but we're still early on in our journey there, frankly, and expect more significant progress towards growth next year. We've also been working on improving the customer journey. From the start of the journey with a financial service process all the way through the final delivery process. And we've made great progress, but we do still have some more work to do. We're also working on new sales initiatives to accelerate deliveries and to improve the customer experience. So a lot of things happening behind the scenes that we're really excited by. I'm also pleased to announce that Lucid customers can gain access to more than 15,000 Tesla superchargers in North America, and that we will integrate the North American charging standard into our vehicles in 2025. And of course, all Lucid vehicles with a current CCS charging standard will be able to access that network through an adapter. Now, this is an important addition to providing our customers expanded access to reliable and convenient charging solutions. Now, turning to software, earlier today, we started rolling out our latest over-the-air software update. This update will enable a new revolutionary feature in vehicle-to-vehicle charging. Not only are we solving range anxiety with our industry-leading range, but the Lucid Air can now also lower anxiety for owners of other EVs with less range. So please stay tuned for more details of this in the very near future. But let me tell you why this is so significant. This is a shining example of our systems approach to the design of the vehicle. It's the tight integration of our cutting-edge software with our state-of-the-art technology. Now, this systems approach of integrating hardware and software is what allows us to provide these value-added updates, and I believe few in the auto industry can do it as well as to the degree that we can. And with the Lucid Air, the longer you own the car, the better it can get. We continue to improve and add functionality as you own the car. Now, I invite you to watch a video with Mike Bell, our head of digital, that you can find on the Tech Talk section of our Lucid website, and which I hope will give you some insight into our software differentiation and a glimpse into what's to come. I'm also delighted to say that we recently closed our Aston Martin arrangement. Sherry will go through this in more detail, but I want to highlight that Lucid was chosen as part of a competitive process based upon the merits of our Sapphire technology. And in fact, since the announcement of the Aston Martin deal, I'm very pleased to say that we've seen an increase in inbound interest to access our great technology. As we move forward, I continue to see significant market potential. We'll continue to advance our technology and look to further widen that technology gap. Some in the market are talking about the potential for a reduction in EV investments by other OEMs. Now, whilst I urge the industry to accelerate the transition to sustainable transportation, nonetheless, if this were to come to bear, I believe that Lucid would be in a prodigious position to benefit through our technology licensing business. And whilst Lucid is becoming widely recognized as having the best EV technology, bar none, some may be led to believe that it's expensive to make. And this is not well understood. Our technology was designed from the outset for mass manufacturability. I cannot close without talking about a product I'm very excited about, the Lucid Gravity, our 3-row, 7-passenger SUV. And I can't wait to unveil it at our special launch event on November the 16th, next week at the LA Auto Show. The Gravity will significantly expand our market opportunity, opening up a total addressable market that is nearly 3 times larger and growing. More importantly, for our customers and for the planet, the Gravity takes all of the innovations of Lucid Air and builds upon them. The range, the efficiency, the performance, the driving experience, the interior space, just everything that people love about the Air and that helped redefine the sedan space, we will now bring to Gravity, and in turn, we will redefine the SUV in the electric age. But let me be clear, the Gravity SUV isn't an Air sedan design that we just converted to an SUV. The Gravity has been designed from the ground up to be a true SUV. Now, I don't want to reveal too much, but I think you're going to love it, and I just can't wait to show it to you all next week. And I hope that many of you will be able to join us for this momentous occasion. So in closing, we recognize that there are forces that are out of our control and that some are not. We are navigating an uneven macro environment that is also affecting many others in the industry. But I'm excited about the remainder of this year and for 2024. In addition to Gravity and the expansion into a larger and growing market, we have a number of other announcements that I'm excited to share with you in the future. We know we have a lot of hard work ahead of us, and I'd like to close by saying thank you to our most important asset, our employees, to our suppliers, and to our partners. And with that, let me turn it over to Sherry for an update on our financials. Sherry.
Thank you, Peter, and thank you to those who are taking the time to join us today. I'd like to start by acknowledging our employees for their perseverance, dedication, and especially their hard work, and our suppliers and partners for their deep commitment. We've endured through the pandemic, global supply chain disruptions, and now an uneven macro environment. Despite all of this, we gained almost 300 basis points of U.S. market share in the premium luxury sedan market year-to-date as of September 30th versus the same period in 2022. We opened manufacturing locations in 2 continents, and we launched our full lineup of Air variants. We believe we have the best car on the market, and we're equally excited to redefine the SUV market with Gravity. Before turning to Q3 results, let me speak about the Aston Martin agreement. We're pleased to have closed the deal, and pursuant to the terms of the agreement, we received approximately 28.35 million ordinary shares in the first cash installment of $33 million. Excluding the Aston Martin shares, this deal is anticipated to be worth in excess of $350 million. Turning to our cost control program, as you'll recall, this was one of our top 2 priorities we highlighted at the beginning of this year. The 5-part cost control program that we implemented in the first half of this year has yielded significant operational improvements and cost savings through inventory level drawdowns, as well as vehicle direct cost, freight, and overhead cost reductions. We've been able to draw down our raw material inventory levels by approximately 10% from the start of Q3 through improvements made in material planning and inventory management. Particularly, we've been able to improve forecast accuracy of our inbound shipping channels and optimize inventory entitlement through the course of the program. These lower inventory levels have resulted in materialized savings related to logistics and material handling labor, equipment rentals, and working capital. For vehicle direct costs during Q3, we were able to implement measures such as battery cell optimization and product development improvements. For example, a new battery cover is being introduced across all modules that we manufacture. Additionally, we've introduced packaging improvements on large parts such as fascias, panels, and glass as part of Lucid's carbon footprint reduction plan. The cost control program for vehicle direct cost has also helped identify and steer further opportunities for 2024 with key measures such as product feature consolidation and upgrades, as well as bringing select operations in-house. Further cost reduction opportunities have also been identified in both cost of goods sold and OpEx. Now, turning to our 2023 third quarter financial results. We produced 1,550 vehicles during Q3. These are factory-gated vehicles that are ready to be sold to a customer. This does not include the over 700 additional vehicles that were manufactured and then prepared into semi-knockdown kits. These kits are not counted as factory gated until they're finally assembled at our AMP-2 factory in Saudi Arabia. These Saudi Arabia vehicles are a combination of retail, customer, and government cars, and we hope to deliver many of them in Q4. We delivered 1,457 vehicles, up 4% both year over year and sequentially versus Q2. We had hoped to deliver more vehicles in Saudi Arabia in the third quarter. However, the scale-up time has taken a little longer than estimated. Turning to the P&L. In Q3, we recorded revenue of $137.8 million, which represented a quarter-over-quarter decline of 9%, largely driven by a change in product mix. Cost of revenue was approximately $469.7 million for the third quarter. Our gross margin improved slightly on a quarter-over-quarter basis, primarily due to lower impairment charges in Q3 related to the lower of cost or net realizable value that we also refer to as LCNRV. This amounted to $230.8 million in Q3, a 21.7% reduction from Q2. Looking forward to Q4, although there are many controllable and uncontrollable variables that can affect gross margin, we anticipate improvements to gross margin driven primarily by projected reductions in impairments, BOM cost, and logistics, along with us beginning to recognize productivity improvements as part of our transition to AMP-1 Phase 2, offset to some degree by incentives to help aid conversions. I would also highlight that our results do not include any potential IRA benefits as we work through fully contemplating the accounting dynamics. However, we still expect to be able to recognize benefits, which may be up to $2,000 per vehicle, and we are evaluating the timing of recognition. It's also important to note that there have been meaningful reductions in commodity costs, which we've not yet benefited from due to higher than optimal inventory levels. As we work down inventory we built, partly due to COVID and partly due to the inventory ramp-up associated with the launch of new vehicle variants, we expect to see meaningful financial benefits in 2024. We'll be watching very carefully for any inflationary impacts that may offset these gains, however. Now moving to operating expenses. R&D expense totaled approximately $230.8 million, down 1% sequentially. SG&A expense was approximately $189.7 million, down 4% sequentially. The sequential decrease was attributable to better cost management, partially offset by higher marketing expense. We added four new locations to our studio and service center network in Q3, bringing our total at the end of the quarter to 45, excluded our temporary and satellite service centers. On the service side, we ended Q3 with 41 mobile vans in the fleet in 77 nationwide approved body shops. We also plan to continue to open satellite service centers, which will cost-effectively provide additional locations for Lucid customers. Our stock-based compensation in the quarter was $68.2 million, down 4% sequentially. You should expect to see an increase in Q4 due to vesting as well as incremental hires. Total other income was $122.3 million, up from $74 million in Q2. The increase was largely attributable to higher interest income due to higher average balances and book yield from cash and investments. We also recorded a non-cash benefit of $60.3 million related to the change in fair value of our common stock warrant liability, up from $42.1 million in Q2. As a reminder, this non-cash impact can be influenced quarter to quarter by a number of factors, with one of the larger factors being Lucid's share price at the end of the quarter. In Q3, we achieved an adjusted EBITDA loss of $624.1 million. Moving to the balance sheet. We ended the quarter with approximately $4.9 billion in cash, cash equivalents, and investments, with total liquidity of approximately $5.45 billion. We've been able to consistently sustain a strong balance sheet over time, and as we've done for the last 2 years, we'll continue to be opportunistic in exploring and diversifying access to financing sources. Turning to inventory. Total inventory decreased 6% sequentially. Presuming that supply chain pressures continue to stabilize, we continue to see a pathway to a significant reduction in raw material days of inventory on hand as we work toward greater predictability in the transportation channel and refine our inventory management processes and systems. Capital expenditures were $192.5 million, down 5.5% versus Q2. Moving to the outlook. We are adjusting our production outlook to a range of 8,000 to 8,500, down from our prior guidance of more than 10,000. I want to make clear that production is not our bottleneck, but rather we're taking a prudent approach to inventory management and working capital to better align with deliveries. The timing of in-transit semi-knockdown kits to Saudi Arabia could affect production in any given quarter, as you saw in Q3. So that's something to keep in consideration as well. With regard to our liquidity position, we ended the quarter with total liquidity of approximately $5.54 billion. We expect this will give us runway through the start of production of Gravity and into 2025. Moving to CapEx, we expect capital expenditures for 2023 to be between $1.0 billion and $1.1 billion, reflecting deferrals in our capital outlay. CapEx will support our continued growth objectives as we strategically invest in manufacturing capacity and capabilities, some moderate investment in retail studios and service center capabilities across the globe, as well as vendor tooling for Gravity and other areas supporting growth of Lucid's business. Before I close, I want to mention the Form S-3 that you may have seen filed today after market close. This is not a new issuance and is related to the previously announced private placement of common stock to the PIF in June of 2023. Pursuant to the agreement, we were required to file a registration statement. So this is simply the execution of our contractual obligations, and this is not a new issuance. I'd like to close by saying that I'm proud of the team's execution in a difficult environment that affects many in the industry. We started production of pure rear-wheel drive in Sapphire in September. We transitioned over from Phase 1 to our new Phase 2 facility for general assembly in Arizona. We opened AMP-2 in Saudi Arabia, all on time. We closed the Aston Martin deal, launched our referral program, and will be delivering our vehicle-to-vehicle charging feature through an over-the-air update, highlighting the tight integration of our hardware and software, something we believe few others in the industry can do. But we know we have much more work to do. We're working hard to increase the number of vehicles on the road to help drive an inflection in brand awareness. We're keeping a strong focus on cost control, and we're working diligently on improving the customer journey. And on November 16th, we'll finally release more details about our Gravity SUV at our unveil event at the LA Auto Show. We can't wait to show you this incredible SUV. We think you're going to love it. With that, let me turn it back to Maynard to get your questions. Maynard?
Thanks, Sherry. We'll start the Q&A portion. Before we get to questions on the phone, we're going to post some questions from our retail investors through the Say platform. So we'll start with the first question. What is the plan for Lucid to expand their operations and start becoming a profitable company?
Thanks, Maynard. Well, I think we answered the question about our expansion plans already with our discussion of the AMP-1 Phase 2 expansion in Arizona, with the AMP-2 in Saudi Arabia, as well as the expansion of our studio and service network. The second part of your question refers to our path to profitability. This is where our cost control program and the efficiencies that we're looking to adopt through every part of our organization is a core part of our company's focus. Our most important areas of focus continue to be bill of material cost down initiatives, manufacturing labor and overhead cost down initiatives, automation of key process and expansion of core system capabilities. All of this is to be coupled with our extensive demand generation activities globally. As we ramp production and with Gravity coming, we believe it will start to really show the strength of our business model. And of course, we'll have midsize to look forward to as we exit mid-decade.
Great. The second question, are there any plans to stop the current slide of stock prices? What are the efforts Lucid is doing for it?
Well, as you know, stock movement is a function of a number of factors. And some factors are clearly beyond any company's control. There are things like interest rates, supply chain issues, and other macro conditions can make it extremely challenging for any company to offer the kind of predictability that investors would like to see. Now that said, what is within our control is continuing to deliver on our product rollout promises, to continue to innovate, to invest, and to make important progress against our plan. We'll also continue to push the revenue opportunities beyond automobiles, whether in technology, emission credits, and indeed software. So quite simply, we have to execute, and the announcement today of our org structure changes, I believe, will help us really tremendously.
Thanks, Peter. The third question I think we answered in our prepared remarks as it relates to any guidance for 2024. Sherry mentioned the outlook is typically something we give on our Q1 earnings call. So we'll move to the next question. What will Lucid do to prevent cash burn per vehicle?
Great. Well, first, let me just start with the cash and liquidity that we have on hand. In my prepared remarks, I think I might have just said $5.54 billion. It should have said $5.45 billion. So I just want to get that correct on the record. But this particular question, there's a lot out there today that is misleading and frankly misunderstood as it relates to this question. First off, it conflates cost with investment. And this particular question is specifically asking about our cash burn per vehicle. It's really important to note that there's a number of non-cash expenses that are in our P&L, things that we've already paid for that are showing up in the P&L. So the largest ones include depreciation. This is not just of our manufacturing and studio service center expansion efforts, but also for all other depreciation related to facilities, investment in our new program tools as well. Additionally, we talk about the impairment, and we refer to it as the LCNRV, which looks not at today, but it also includes costs today that are related to future quarters. So it's conflating future costs in the current period, which can give a misleading interpretation of these numbers. So with that as a backdrop, there are a number of things that we are doing today at a company level and at a per vehicle level. And those are as follows. And some of them I just talked about: BOM cost reduction, manufacturing labor and overhead reduction, efficiencies across all areas of our business. Importantly, also enabling the flywheel effect that we expect to naturally occur as more of our cars are in the market and in people's driveways, and our fantastic customers have the ability to drive enthusiasm in their neighborhoods and on the streets. So what is important here is that we have a plan, and we are working diligently across every area of our business to reduce costs, drive enthusiasm for our brand, and bring profitability to our investors as quickly as possible.
Thanks, Sherry. Maggie, we'd like to turn to the phone lines for questions.
No worries. Thank you very much. We will now conduct the audio questions. Just a moment as we compile the Q&A, please. Our first question comes from John Murphy from Bank of America. Please go ahead.
Good evening, everybody. Just a first question, Peter and Sherry, just about the Saudi CKD units. It's 700 plus, in the quarter, and I would imagine there'll be, some more that come in the fourth quarter. Sort of an optimist might say, hey, that's the significant reason you have the guide down on production units. But sort of a pessimist might say, hey, those aren't included. So I'm just trying to understand where these units are ultimately going to be accounted for. And if we think about the 700,000 units going to Saudi, I would imagine they're effectively pre-sold. I mean, there's no question that there's orders there. So I would imagine that the revenue recognition and the sale would occur, almost immediate upon, final assembly there. So just how are these being accounted for, and how should we think of that relative to the guide down in production for the year?
So first off, the SKD units, as we said, are not showing up in production for this quarter. So we'll be building those out presumably over the next quarter. So they'll show up in production numbers likely mostly in Q4. Okay, so that's the first part of your question. With respect to being pre-sold, I can't really speak to the exact, transaction dynamics with us in the Ministry of Finance. We really don't speak about, the specific transaction elements of any of our customers. But what I can say is that, part of these units will be for the government, and part of them will be for retail. We have already begun deliveries to the government, as we said in the 10Q, though that was non-material for this last quarter, and we expect to increase going forward.
Okay, sorry. Maybe just to follow up on that. I mean, there will be a reload on this in the fourth quarter, right? So I mean, it does seem like you're selling yourself short or being a little bit too humble on what was executed this quarter and what might be executed in the fourth quarter. Would it be fair to assume that these you're calling them SKDs, I call them CKDs, whatever, on these knockdown kits, will continue to reload for for the foreseeable future until that AMP2 is really really up and running?
Yeah, so we'll be establishing a quarterly cadence over time. I think that's fair to say. And it's going to be important for us also to introduce other product variants into the region. So we'll be producing new product variants that will also be shipped over to Saudi as well. Some of those will be produced in the quarter. Some of those are going to be in ships at the end of the quarter or not yet into production numbers. But yes, I mean, you're going to be sending vehicles over there, producing them into finished units, and then delivering them, and then completing that process each quarter.
Yes, I think we'll reach an equilibrium point, John, where those units in transit equalize out. A lot of this is due to the shipping time, getting those kits from Arizona right around the world to the kingdom. And I think that you have to remember that those are incomplete units, so they have to be counted as work in progress. They cannot be counted as factory gated. They might leave the factory in Arizona, but that doesn't count as factory gated until they're reassembled. And that moment of leaving the factory in Saudi Arabia, that's when, for accounting purposes, we can count them as produced.
Yeah. And in fact, if you look at total inventory, you would have noticed that went down by 6%. Raw material went down about 12%. That was due to some of the better material planning we had talked about, as well as inventory management. Finished goods actually went down as well, around that same amount. But work in process went up, and that went up because of these specific SKDs. But again, on the whole, you're down about 6% on an inventory basis. You're just going to see a different composition of it now going forward.
Okay, that's incredibly helpful. And then just, Peter, just real quickly, as a second one, the idea of licensing powertrain technology seems like it should be becoming more and more appealing to the industry at large, as everybody is struggling to get these EVs launched profitably. It's not just you, but it's literally everybody. Has anything changed in the tenor of discussions, or is there anything new you can say directly on this? And maybe you could kind of confirm that you might be having these conversations in Korea, Japan, Europe, and North America, maybe all the major regions, and China, obviously, too?
There's nothing specific I can talk to, but I will say this. We've closed successfully, delighted to close our agreement with Aston Martin. And that, indeed, awareness of that has definitely catalyzed a degree of inbound interest. Now, that said, the sort of technology we've got right now suits pretty high-end cars like Aston Martin's. But as we transition to our technology, which is appropriate for a mid-size platform, that's when we will be in a position to attract a whole new strata of clientele, more family cars, more affordable echelon altogether. And so really, we're looking at how could we accelerate that technology for the powertrain for mid-size, that we could be in a position to capture any inbound interest in that position of the market.
Yeah, and I want to provide maybe an ecosystem perspective on this as well. I mean, we're not going to prognosticate about what other OEMs are going to do, but if you read a lot of the earnings scripts that just came out, people are starting to look at the portfolio they have of ICE products and EV, and you hear some hinting as to possible pullback a bit on EV. If that were to be the case, we're not saying that it is, we do think that us having this technology licensing program puts us in an advantaged position, and we can possibly help some of these OEMs as a partner.
And I think there's also recognition as well, John. It's relatively straightforward to do a kind of average okay EV because you just buy the parts off the shelf. But that is going to be unacceptable. It is already. And I think there's such a recognition that we got something very special with our technology, and we still haven't got the message out just how affordable our technology is in its own right. But when you overlay the true power of efficiency, that our efficiency of our drive units and our whole system means we can go further with less batteries. This addresses the cost of the battery. And I think that there's a growing awareness of this, which is our strategic advantage, and our customers can leverage this. Aston Martin can leverage this. And it can mean that the Aston Martin can be lighter with the same range because it's got less battery. And that's an incredibly valuable attribute for the super sports car like an Aston.
Very helpful. Thank you, guys.
Thank you.
Thank you. Our next question comes from Stephen Fox from Fox Advisor LLC. Please go ahead.
Hi, good afternoon. I wanted to ask a question I think I've asked in the past in a different way. The company has definitely battened down the hatches in terms of costs and done a lot to leverage technology and the white paper start you've had with the production. All of that is you should receive applause for how you've reacted to higher interest rates. However, I mean, to me, it seems like the company might need to take some more drastic steps in the future, given that interest rates look like they're going to stay higher, maybe move higher, to sort of modify your ambitions. What would trigger such an event in your mind, Peter? Like it just seems like it's a more niche market for a longer time for Lucid, unless you can argue the opposite for say the next 12 to 24 months.
I think we're taking a very prudent, very nuanced view. Sherry is doing a great job in leading the imperative of cost optimization. We're looking at all measures here, looking at our efficiency of making the cars, looking at our working capital, looking at inventory, all aspects of the business. We're also pushing like crazy to improve our delivery numbers. Now, I think that we're looking at Gravity, which is going to be a transformative product just around a year from now, late 2024, with a considerably greater market potential than, and a growing market potential in SUV. And I think that's going to have a transformative impact upon the company. We've always taken a very prudent and nuanced view for cost control and cost effectiveness within the company. And all I can say is that will continue as an absolute cornerstone of our thinking and our very being here at Lucid.
The other thing I would just say about the interest rate environment, I mean, it is known that it is more expensive right now for customers to buy cars. We know that, and that is why we are offering some support there. But there is another side to the interest rate environment for Lucid in particular. We're sitting on a very large cash balance, and we have a lot of this invested. So we've actually been experiencing quite a bit of interest income associated with those costs, or with the cash balance as well, and the interest rate environment. So there is, another side to it as well as it pertains to us in particular.
That's helpful. And if I could just ask maybe a more upbeat question, and I look forward to seeing the Gravity next week. But like when you think about ramping revenues from the SUV, how complementary do you think you can make it to the existing models out there, existing stores, so that like the incremental cost to ramp Gravity is more on the production side and less on the sales side? Thanks.
I think that we've configured our stores to have room for a Gravity alongside an Air. It's always been a part of our sort of a cohesive strategy that we've implemented. Yeah, we're investing in our retail network, but a lot of that is built out ready for Gravity. And I think we also should think of the very considerable investment we've already made in phase 2 of our factory in Arizona, ready for the Gravity. I think another point here, Stephen, is just how different a product Gravity is from Air. When we look at cannibalization, of course, we took the decision not to just base Gravity upon Air platform and therefore result in some kind of car-like sort of compromise. We really designed Gravity as a true SUV with its all-new platform and made that investment to create two very, very distinct product lines between Air and Gravity. So I think we can really capture people's imagination in two very distinct markets from two very distinctly different products as a consequence of that.
Mm-hmm. And then just from a financial perspective, the way I think about it is, much higher asset utilization, not just at the stores, at the service centers, at the sales staff, but also we're sharing a paint shop, we're sharing powertrain, we're sharing general assembly. So there's going to be a number of areas where this is just going to give us more flexibility as a company to really respond to the demand signals that we're seeing in the market.
Absolutely. I mean, Air and Gravity will go down the same line. So you'll actually see the same production line that we built in the factory. You might see one Air and a couple of Gravities, a couple of Airs, 3 or 4 Gravities, and they'll be coming right alongside each other. And that's a real economy of scale.
Great. That's all very helpful. Thank you.
Thank you. Thank you.
Thank you. Just a moment for our next question, please. Next, we have 𝗖𝗢𝗡𝗘𝗖𝗧 from BNP Paribas from Exane. Please go ahead.
Hi, guys. This is Jake on for James.
Hi,
first, just looking at your liquidity, it looks like we're looking at about a $900 million cash burn per quarter into 1Q25. First, can you confirm if that's accurate? And then how much of that is tied to the Gravity launch versus just continued run rate on the Air?
Sure. So the free cash flow this quarter is actually lower than what you just cited by a couple $100 million. And then your second question was about the Gravity launch. And what was the question related to the Gravity launch?
Just how much of the cash burn is tied to the Gravity launch versus continued run rate on the Air?
Sure. So maybe I'll answer that a little bit on the CapEx side. So you'll see that we guided our CapEx down to $1.0 to $1.1 billion for the balance of the year. Now, we're not giving guidance, but you can do the math. You can see that we started the year with a capital CapEx guidance for around $1.5 to $1.75 billion. What we were able to effectively do is we were able to move roughly $500 million of that CapEx from 2023 into 2024. So when you get into 2024, we do expect to have about $500 million of CapEx spend to finish the launch in the facilities, as well as the machinery, tooling, and equipment associated with that Gravity onboarding. And so we did recognize some savings. So that's why it's not as high as 1.75, in totality, but that will be related to the Gravity. We'll also have some vendor tooling as we move into next year, probably spent about a third of the vendor tooling in 2023, about 2/3 of that yet in 2024. So the Air, the majority of the spend has already occurred. Of course, you have people that continue to be on carryover product, continuing to make advancements and improve the product, but the spend on an engineering level and an R&D level is really shifting into Gravity, and then also the midsize as well.
Perfect. That's very helpful. Thank you. And then it also looks like ASPs in the third quarter took a pretty big step down as pure mix ramped up. How should we expect that to trend in the fourth quarter as we see more Saudi shipments and you guys ship the Sapphire? Thank you.
Yeah, you're right. So as we went from Q2 to Q3, we had an ASP drop. That was partly expected. As I guided last quarter, I talked about how we were going to be introducing the Pure in larger numbers in the U.S., in that we were also going to be ramping shipments and deliveries in Europe in KSA, but that's small on a comparison, a percentage basis as it relates to the U.S. deliveries in Q3. So as we move to Q4, we continue to see the U.S. as being the dominant market. We do see KSA and Europe increasing, but I would guide that it's going to be relatively flat. I think it'll be a similar mix as you're seeing in Q3 as you'll see in Q4.
Perfect. Thank you.
Thank you. I would now like to pass back to Maynard for closing remarks. Thank you.
Thank you. So this concludes Lucid's third quarter 2023 earnings conference call. Thanks everyone for joining us today, and you may now disconnect.
Well, so yeah, let's get to that. A couple of things. They didn't apologize. I know it doesn't mean much, but they were 7 minutes late. I've been on quite a few earnings calls, and normally they're not late. So that was kind of, and I guess Q2 I was a lot more optimistic. Peter and Sherry, they were a lot more transparent. But this time around, they diverted a lot of the questions. So these are obviously the questions they asked. Was a plan for Lucid to expand their operations? They did not talk on that. They talked on pre-existing operations. See, I really like Sherry. Sherry out of the two, I like Sherry. But even her, like I don't know. I don't like it. Don't like it one bit. Because yeah, they just said, oh, AMP1, AMP2, and the pre-existing. Actually, I think she quoted for the most part this right here. So went over some of these stats. But they didn't answer this question. And of course, they can't talk on profitability, and because they don't have the ability to do that. So, and it's kind of funny when Peter took this question, I'm like, oh God, why is Peter taking this question about the stock price going down? Oh, there's things out of our control. Completely disregard. I don't know if you guys caught that at the time when he was saying that. I showed this chart, Lucid just straight up down. Tesla, supposedly it's affecting everyone the same. Well, not really. Not really at all. Tesla's doing okay. Rivian, yeah, they went down, but they're still definitely good compared to Lucid. Lucid has just been crapping the bed. So, wasn't really good. And I saw in the chat, I would really like to know about what their plan is for a reverse stock split, because as it stands, they are considered a penny stock right now. It's been below $5 for 10 consecutive days. So we'll have to wait until the 13F, the new ones come out, probably beginning of the year, just to see what institutions did in Q4. But she is right, Sherry, about this S3 that came out. So they are just registering shares. So this isn't dilution, but ultimately it is going to be dilution. It's just not new, if that makes sense, because initially they did a 8 billion S3, and so they've been slowly eating at that. So still not necessarily the best. I do disagree with Sherry. She kept saying that, going back over here, where was it? Cash and investments. Like they're acting like a lot of their like cash and cash equivalents. That is literally what you take to pay things, right? Like they kept saying, pointing out like 4.9 and then going back and it's like 5.4. Like this isn't the true amount. If you look at the earnings, like all you have in cash is 1.1, which isn't sufficient. So dilution, I didn't like as well when they said that those 700 units that's going to the AMP2 facility, they're not pre-sold. She tried to spin it off saying that she doesn't know, but guaranteed if they knew and it was positive, they'd be saying it. So, and exactly what 𝗖𝗓𝗡𝗃 did say, they didn't say anything about China. So going back over here, yeah, this would have been a perfect opportunity for them to say, hey, you know what? were looking about future opportunities potentially to expand to China, but they didn't say anything. So I don't know. I feel like I'm not going to say it this time. I've promised myself I'm not going to say this, because the last like 4 earnings I've said, you know what, this is going to be the last bad earnings. It's going to be better next one. My hint from what has come out from Sherry and Peter, I don't think it's going to be that good for next quarter either. But yeah, it just doesn't, I didn't get a good sense. And for those of you, too bad it was at the same time, because I actually like to look at Rivian's earnings as well. The difference between Lucid and Rivian speaks with confidence. They are currently up 3.4%, obviously as a result of the earnings. I haven't really looked at the dynamic of it yet, but like Rivian is confident about their product. Lucid is not. So Lucid desperately needs to get their stuff together. I do not understand how Sherry and Peter can come out positively and say, like, you know what, we did okay this year. Like, they basically, their deliveries are up 4% on a year-over-year basis. What the hell is wrong with the company? So I don't know. Once again, maybe I'm being too harsh. The only reason why I'm still holding my position, and I saw some people asking, what am I doing? I'm not going to sell, because I've been pretty good with doing covered calls and reading the chart. And so pretty much my whole investment's been made up through options. So in reality, I don't like whether I'll add. I think the next time I will add will be probably around the maybe 250 mark. But technicals are breaking down, and this is just not looking good at all. So I don't know. There is some positives, of course, with them saying that they are open to essentially a lot of the large OEMs. They're kind of open to discussions for licensing. So that's kind of a good thing. So that'll be outside the parameters of the PIF, because obviously they have overseen and pretty much handed Lucid all of the deals. Well, I guess Aston Martin and maybe Hyundai in the foreseeable future, but like that was a good thing that they said. So they might potentially license to Ford, to GM, someone else maybe. So that definitely is a pretty good thing based on that. Sherry, I might have missed it, but I think she just said it in passing, but they didn't say how many units they're sending for Q4 to Saudi Arabia, so to the AMP2 to be built. They said the 700 units, which I guess going forward is just going to be delayed by a quarter, assuming for production time and delivery and whatever else. One thing that stood out to me, and I don't know, maybe it's just my mind how it's trying to find fault essentially, but one thing that really didn't sit well with me is when she said, here, I'll just pull up my notes, the fact that they are reducing their actual numbers down to 8,000 to 8,500, but that's not due to any bottlenecks. So I think that's just a nice way of saying that it is because of demand. So, and pretty much even if you just add these up, this isn't even counting the rollover from 2022 production. Well, actually I already added it up here, so I'll just go like this. So technically 6,000 have been produced so far in the first 3 quarters, 4,200. So that is huge. That's just huge. I'm not even counting the 3,000 in 2022. So there's roughly about, in this earth, around 5,000 vehicles that have been built since 2021, since the doors opened, that have not, or that don't have an owner. I think that is maybe what they're talking on, why they're not really trying to produce more. So I think in reality, there is a true demand issue. I don't know. But as bad as it, I don't know. Peter seems like a nice guy, but at the end of the day, I think in order for Lucid to move forward and be successful, they do need to get rid of him. He just bumbles quite a lot, and not to say to lay him off, I think they just need to reorganize his position to be more of a tech role. He is not a he doesn't have the drive what a CEO should. Because my interpretation of what has been happening with Lucid is they came into the game, everyone, maybe it's retail's fault and institutions, they put them on a pedestal and kind of made them feel like a god, saying, you know what, you are going to be the next Tesla killer, our technology is amazing. Maybe that just got to their heads and they've just been on this pedestal and still thinking that they're a god, not really seeing what's the stock price and what's deliveries and many things like that. So potentially that might be the circumstances. What happened, we just overinflated Peter's head and but I don't know, they really need to get their stuff together, because I disagree with this PowerPoint slide that I can't remember where it said that they have sufficient cash. No, it was right. Yeah, sufficient liquidity at least into 2025. That is the biggest crock of shit, pardon my French, that I've ever seen. And I guess if you want to consider Sherry as a stock analyst, and this is her picks, she is being wrong 100% of the time. Whenever she ever says, yeah, we have sufficient amount of cash up until Q2 of 2023 or 2024, every time that she's ever given guidance has been horribly wrong. Every time. My own opinion, I actually think that they will be diluting within the next quarter, and they have more than enough room through their S3, which is 8 billion. But like, this is very, very wrong. I get the fact that I need to there's a lot of things that I need to kind of brush up on and the finite details of some of the stuff that's being said here. But if you just look at how much they're burning through, how much cash they have, like, logic dictates that's like a unsolvable question. It doesn't work. So where they're saying up until maybe there was a typo. Maybe that's it. Maybe it's not 2025. It's actually 2024. Because I could see probably the first half of 2024 them needing at least another maybe 3 billion in liquidity. But you know what? Once again, when it comes down to Lucid, as I've already said many time again, it's all about timing. And you know what? Like, Lucid is doing a lot of good things. Technology is good, but they cannot act or they cannot sit back, because they are going to lose their advantage when it comes to their technology. And then what? Peter will walk away, get fired, and he's going to make probably $1 billion as CEO, go down for the record of the highest paid CEO. Yeah, he's going to be happy as a clam. Who cares? So I think Lucid does need to, they have a very good opportunity, but based on everything that I listened to, and also one concerning thing that normally people don't really pay attention to. I kind of pay attention to a lot of the maybe unnecessary stuff and see what that's saying. Have you noticed there's only 3 analysts that joined this earnings? That is, I think, the lowest since Lucid has actually been around. So let's see if I'm right. So let's pull up their transcripts. Q2. Yeah, Q2 there was 3, 6, 7. There was 7 on the Q2 earnings. Let's look at Q1. There was 5. So 3 analysts on the call, that is horrible. Absolutely horrible. So that does mean that analysts are losing interest in Lucid. And as soon as you start losing interest in analysts, then that means you're a dying business. As crappy as that is, analysts like to follow, I guess, booming companies. So once again, this is just a small finite detail, but it's something that stood out to me. So yeah, we'll have to wait and find out. Of course, the $3.96, that's a very strong support. And then if it does break that, then anticipate around $3.50. X Shades, does Lucid believe we are dumb? I don't know. I would love for them to answer that, but probably they would just start talking about technology. I don't know. And just the fact that they only answered 3 questions and like Sherry starts by, oh yeah, I answered this already. It's like, no, you didn't. No, you did not. You didn't say any expansion. I haven't, throughout this whole call, I did not hear any expansion plans whatsoever. Like, you talked on operations, current operational plans, but not expansion. So it's like, you did not answer this. And what really bothers me, I know I'm just ranting a little bit right now, but during the Q2 earnings, when Sherry was asked what they're going to be doing to increase transparency, she did not even answer the question. And it's funny because you can actually see their response. So I wonder if they look back at those and like, I answered this, amazing. Triple official, exactly. Shorts are all over this. Shorts are ingrained all over Mullen. Unfortunately, Ortex is having a glitch. They kind of moved to a beta version of it, but short interest is still correct. So 25.46%. It doesn't show what happened today though, unfortunately. But still 25%, that is extremely high. Bravo. So the whole Aston Martin deal for the licensing, they paid partial cash and through some of their stock. So Aston Martin issued stock to Lucid, but they paid 24 million, if I remember correctly, which is just one installment. One thing that I will find that actually. I will give you a good example. Okay, so this was posted on Twitter. So Sultan posted this. It gives you a summary of ultimately what the 8K said. So Lucid is going to be supplying Aston Martin with powertrain and battery systems in contracts worth in excess of 450 million. In excess. What we just found out, it's not going to exceed 350 million. So 100 million somehow got taken off the table. Once again, another small finite detail that people have not realized. But yeah, ultimately it's going to be paid through shares and cash. Very minimal, but yeah, this is, I don't know. I am disappointed, and the thing is, normally, like I said, I like to be optimistic about the foreseeable future, but I didn't get that warm, fuzzy feeling that things are going to get better. I feel like things are... And Peter kept talking about this at the very beginning. So the new COO, like, based on their, like, where is he from? From this, it doesn't say that he has much experience. Peter said that he has renowned amount of experience. It looks like he just graduated. Like, I don't see any, where did he come from? He's saying he's well equipped to lead, blah, 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 but what's his experience? So, I don't know. I have a problem with that too. I clearly have a problem with Peter, and I really, really would love to hear what like someone from the PIF is thinking about Lucid. Like, can they logically still be happy with Peter? That's a question that I would love to ask them. AA, how much lower can it go? Pretty significantly, in fact. So at least based on tomorrow, don't quote me on this. Well, again, it would depend. I think Powell is coming out with a speech tomorrow, so that might rock things a bit, but I can see around 350, maybe. Honestly, when I saw this, the results, I was surprised that people were buying this. I didn't really see any reason to buy it, unless it's shorts just trying to cover, and that's maybe do that. I have no idea. Based on what I see, there was no real reason to buy. Like, this guy got an intro. He doesn't actually have any experience whatsoever. Actually, sorry, my apologies. It says 27 years of experience, but it doesn't actually say where in here. The only thing actually states is the fact that he graduated master's degree in electrical and electronics engineering and management. That's another thing that we don't need, is another damn engineer. That hands down is what I've said in the past. The difference between Lucid, Rivian, and Polestar. Polestar and Lucid, their management are very similar, very analytical, engineer-like. That is not business. Like, that is good supporting roles, but Rivian is business individuals. You can tell that. Just the way that they uphold themselves, the way that they speak, you can tell they mean business. And yeah, obviously the stock price is very kind of indicating of that. So this isn't what we need right now. We don't need another COO who probably will fail and get fired in probably about 6-9 months or something like that. So I'll do a dedicated video. I'll go through this in detail, kind of summarize my stuff, but I'm still trying to think of some positives. Aston Martin, actually no, the biggest positive out of anything is what Peter did say, that he's willing to do a licensing agreement to the big OEMs. That probably would be huge for at least revenue, but you're also giving away your advantage. It just not necessarily the best. And I think we're 10 days away, something like that, for this whole Gravity. That is also going to make or break Lucid as well. Probably by that time period, so November the 16th, people will forget all of this earnings and start thinking about positive future aspects. But if the price comes in at 100, and I have a weird feeling it's going to come in at 120 to 140. I feel like the market's not going to like that. Ideally, it might be asking a bit much, but 80,000 less would be perfect. That's what the market can afford. Peter and Sherry kept talking about interest rates and how everyone's struggling. I feel like that would be a big slap in the face if they say, yeah, you know what, everyone's struggling. Middle finger, here's a $140,000 SUV. It's like, come on, man. Come on. So yeah, I think I don't know. Yeah, what's your guys' thoughts? Like, what stood out to you? If I was to ask you guys, what was one positive takeaway? I'm kind of curious, and actually, I'll watch the chat. What do you guys think was the one positive takeaway from this? Other than what I mentioned, don't say what I said about the OEMs, because I am kind of curious, especially about doing the video. I like to be positive viewpoints, everything, but I don't know. The fact that Peter blatantly lied to people and say, you know what, it's not just us, the market's dragging everyone down. It's like, you know what, Peter, I see this. This does not look the same as Tesla. Tesla is green for the year. Lucid is not. So, I don't know. Yeah, you know what? Yeah, the Loyal Dutch. You're right. Earnings per share improvement. You are right. My apologies. I guess I completely missed that. That did improve. Yeah. You know what? I agree with Sam. There is so much reliance now on the Gravity to save Lucid. So just think about this for a second. What if the Gravity is a flop? What's the next catalyst? The midsize SUV by, well, they quoted mid-decade, but that was answered last quarter. That'd be around 2027. So is that the next catalyst? So if the Gravity flops, which based on their original projections is supposed to be huge, make up at least like 60% of all of the demand for Lucid. If that is a flop, then what? Like, then we have to wait until the midsize SUV? Like, whereas Tesla, that news came out, they're going to be coming out with a $25,000 vehicle. Like, it does not matter. And plus, one thing that I know I've gone in some arguments with some people in the chat in my videos in the past, but like, I'm not knocking the Sapphire, but Peter spent a good like 5 minutes talking about the Sapphire, whereas us, well, I don't know, all logical investors, but most people realize the demand is not there. If people are not buying the Pure and based on the price point, there's almost a guarantee people are not going to be buying the Sapphire, and unless that duffel bag is full of money. But $249,000, like, to me, 10 out of 10 times, I don't care if I have $2 billion or whatever just lying around, like, you get like this, the Pure, like, look at the stats. I know I kind of messed up all this, but look at the stats. Why would people buy the Sapphire? Like, I get maybe you want to race, but is it practical? No, just for having was a lower coefficient and whatever else. Like, it does not make sense. So the fact that Peter was focusing so much on that, it just doesn't make sense. But you know what? I could be wrong. I'm not an engineer. I'm not in their role. I just like clearly reading about the stats. And they kind of vaguely, Peter at the same time when he was talking on the Sapphire, saying that the next best competitor, obviously the Plaid, like that Plaid, I'm sure even if you compare a lot of people, like, would you buy the Sapphire or Plaid? Well, probably a lot of people based on the price point would not choose a Sapphire. So I feel like just Lucid had a good plan, but since 2021, when they started to kick off, things have changed. The economy has done a complete 180. COVID kicked in. That changed a lot of sectors. Interest rates, like, companies that are not profitable are having to work so much harder, and Lucid right now isn't doing that. So, and most likely, what I anticipate is you're going to see a little bit more of a immediate dip. So people are going to be buying a lot of puts, and then during the trading day cause it to just tank. But we'll have to wait and find out. If it does get to around 350 tomorrow, I'll definitely buy some just to probably flip it, or maybe just get my average down. But yeah, things are interesting. My grandma wants a Sapphire. Yeah. Well, one thing I did notice in the past, they did say the fact that there's a certain percentage of the gravity parts they have accessible. Here, I'll quickly go here. So Q2 transcripts. So if we go gravity, they'll talk on somewhere, one of the 13 things, they talk on what percentage they have completed. And November Big Gravity unveil. Next to okay, maybe it's previous quarter. Yeah, no, it's not here. Okay, but yeah. Beside the point, though, I'll try and go through this a little bit more in depth, and kind of I'll do a summarization video. I'll go over some of the highlights of this. Don't anticipate it all to be positive, clearly, because a lot of this isn't good, especially my little hand-drawn chart right here. Like, they have yet to account for roughly around the 6,000 in vehicles that's just lying around on this earth. Where? I'm not really sure. And plus, the fact that they're delivering 700 to Saudi Arabia, are they just going to have more vehicles just sitting out there? Because one thing they did not acknowledge is that the, what did they call it? The Kingdom Dream Edition, they actually had to lower the price. That's something that did not happen in the States and in North America. They did not have to lower the Dream Edition price whatsoever. Whereas there in the Dream Edition original one, there's 500 if I remember correctly. Could be close to that. But the Kingdom Dream Edition, there is only 93. And they had to lower the prices just because people were not willing to buy them. That is another very big red flag they did not talk on. I wish I could actually pose some questions to this. It really does suck because, I don't know for those of you that are Canadian or not, I recently just bought Lucid with my Interactive Brokers, but if you are with any other Canadian brokerage, you cannot ask a question. So up to date, me covering Lucid for almost like 2 years almost, I've not asked a single question to their Q, to their earnings whatsoever. I would love to, but they don't recognize Canadian brokerages, except Interactive Brokers. This is why I finally decided to buy it this time around, but yeah, not necessarily the best. Hopefully things get better, but probably won't be until after dilution, so probably Q1 of 2024. Plot points. I think you're the one that probably complained about that. After hours, look at the volume. Pre-market does matter when it comes down to any stock, because typically people buy and adjust their orders for the pre-market because technically their options will kick in like during the trading day, right? So this is why you don't see massive amount of swings during like high volume or high volatility stocks. As soon as the market does open, then they let it loose. That way their options will benefit. After hours, unless something fundamentally changes, technically, like for instance, you're bringing up Mullen. Do you see this volume? Nothing at all whatsoever. Even looking at Mullen for a second. Do you see this? So technically it went up like nothing, 0.041, and just by looking at this, if you buy, I don't know, there's now a new wall right here, but you can bring it up to easily for 10,000 shares, bring it up to almost 30 cents. So you can cause a 6% swing for 10,000 shares. This is why I do not think after hours is relevant. But if you do plot, go at it. And I have no idea why you care so much about after hours. Can I take the 1 point? Okay. Well, you stick in your dream world, whatever. But yeah, no matter what, I think that's a good summary on Lucid. Good way to end off the stream. Thanks for all joining. Like I said, hopefully bigger and better things do come. We just have to wait and see. Don't forget to hit that thumbs up and subscribe. And yeah, with all that,